Testing, testing, 1, 2, 1, 2. Testing, testing, 1, 2, 1, 2. Okay, that's good enough. All right, so let's go ahead and where is it? Ah. All right, let's get to it. So today, first jump over here to our scans. For the low floats, I'm seeing MSPR and V both right around or under 20%. MSPR is only 54 cents with 17 million shares traded. V is up 13% with 8 million shares traded. On the high float side, we have Nvidia out here with 1 million shares. Well, going on 2 million shares. So these are the three that I'm seeing right now. Let's go look at their charts. V kind of did a round trip. Went from 168 up here to 343, all the way back down. See MSPR, pretty similar move there. 45 cents up to 64 cents and all the way back down to 40 cents. And none of these have catalysts on the day. None of these have catalysts on the day. AMZE just came up here, just hit 1 million shares traded. All right, so let's get into the news and all of the forecasts that we want to know about. So front page, we got Alphabet stock rallies after Berkshire reveals 4.9 billion stake in Alphabet or Google. Take note of that. Google is up 4% right now. It's almost to 1 million shares traded. Has 758,000 shares traded. Nvidia, Walmart earnings and jobs numbers the week ahead. Dip buyers. Good morning, Hebrew. Dip buyers boost Wall Street strategists eyeing year-end rally. Crypto's riskiest tokens plummet to pandemic era levels. Let's see. GMI Cloud to build 500 million AI data center in Taiwan with NVIDIA chips. Okay. GMI Cloud. Peter Thiel's fund sold off entire NVIDIA stake in Q3. So NVIDIA got some crossing news. It's got some good news, and then it's got people selling it off on the other side. Let's see. Hold your ground. Wall Street sees tech sell-off as a blip. Fed shakeup is coming. Okay. Jeff Bezos to co-lead AI startup in first operational role since Amazon NYT reports. Okay. So Amazon in the top news as well. We'll see how much volume they have. Amazon. Not that much volume, but Amazon is usually not a lot of people go for the other tech stocks a little bit faster because Amazon, even though it can move fast, sometimes it just doesn't. Japan's Takachi has few good options, blah blah blah. Target and Starbucks are in trouble. We know. Go look at Target and Starbucks. Oh man, they don't have any volume on today. Okay, so they're not really a threat. Gold steadies as traders assess fading U.S. rate cut outlook. EDF Opcare to develop 4 billion euro data center in France. Trump is right. He lowered some of your costs, but he also made many prices higher. Yeah, that's what the tariffs were gonna do. All right, so let's see.
Bitcoin fell into the red for 2025. In fact, around $600 billion has been wiped off its market value after it reached its record high back in October. But what's going on? 2025 was meant to be the year that was supposed to solidify Bitcoin's legitimacy. There are more and more ETFs linked now to crypto. It's got easier regulation, institutional support, and the Trump administration has shown that it's fully behind the industry too. But that hasn't stopped the market from falling, and falling hard. Yes, in crypto we're told to expect volatility, but why has sentiment seemingly evaporated so quickly? The one reason that helps explain this fall in crypto, and it's not just Bitcoin that's falling, is market expectation for a Fed rate cut is also falling. Market pricing for a December rate cut dropped to around 40% from over 60% just 1 week earlier, prompting investors to shift capital away from high-risk assets. This dramatic reversal in expectations has sent ripples through cryptocurrency markets and traditional financial instruments alike.
This interesting dynamic this year where, okay, cooling labor market, but GDP has been hanging in there, right? I mean, tariffs, trade, Fed uncertainty, it's hanging in there, it's resilient. And I'm just curious to get your take on that dynamic, Neela, and whether you believe that's going to play out the same way in 2026.
Yeah, so the labor market has really been holding hands with the consumer this year. And actually for the last several years after the pandemic recovery, we have a relatively strong labor market. It's been called low hire, no fire. I think it's been static. It's been less dynamic than we're used to, but we haven't seen a lot of outflows or inflows. What we have seen, though, is that the hiring momentum has slowed quite a bit since the beginning of the year. So yes, the consumer is still well supported by a functional labor market. That means they're going to keep spending. But you can already see from the tape you rolled, there's an uncertainty cloud over that spending. And that uncertainty is strongest for low-income, low-wage consumers. So even though we have an economy and a consumer that is strong enough to keep that economy growing, it may not be strong enough to keep the job creation flowing and that hiring momentum. Yes, strong enough to spend, but not strong enough to get those mom and pop businesses to hire yet another worker when they're already facing a lot of uncertainty.
Thanks so much for hopping on. So just as you look at the quarter for NVIDIA next week, what are a couple of things that you and your team are going to be looking at for a sense of not just their own business, but what NVIDIA can tell us, let's say, about the broader AI spend right now?
Well, I mean, NVIDIA is by far the largest supplier in the market. So I think what they tell us is going to really be a good indicator of where AI spending is right now. And I think they're going to have very positive things to say. So we've done checks in Taiwan. The Taiwanese supply chain is continuing to see upward momentum. Had conversations with people selling into their products in the US. The same thing. We've heard it publicly from the CSPs, right? They are spending more on AI. You've heard from companies like Supermicro, where they're expecting sales to roughly double Q on Q, tied to better shipments of the pretty much NVIDIA AI racks. And so I think NVIDIA is going to have really positive things to say about Q3, Q4.
You know, I'm curious how you think about the stock at this point. And I ask because when you look at NVIDIA on a valuation basis, we always have this conversation. it's pretty reasonable, especially against a lot of its peers, and really where the stock has been over the last couple of years. It's grown into that valuation and more than in some cases. How do you think about just the stock today, what you're paying for as an investor? Again, trading about 28 times, which compared to what else you can see out there is not crazy.
Yeah, no, so it's not expensive on an earnings basis. The concern that's been around for the last couple months is just the revenue numbers are getting so big that they require so much spend from these companies putting in data centers, and where's the funding going to come from? And that's, I mean, that is a legitimate concern. Having said that, it's a bigger concern if there's not revenue generated. And if we had this discussion a year ago today, you would be pointing out the fact that a lot of this infrastructure is going to supporting trading, which doesn't generate revenue. But now what we're starting to see is that inference workloads are building. Those are what generate revenue. It's what generates profit. And it should be what funds that debt that's being used to pay for these data center buildouts.
And then thinking about NVIDIA specifically and their product roadmap, what are you expecting to see in terms of the discussion around Blackwell sales versus thinking ahead to where Rubin fits in and just NVIDIA's own product velocity here?
I think at this particular venue, right, their Q3 earnings, we're going to hear a whole lot more about Blackwell. With Rubin, it's really starts as a second half 26 story. I think that we see the larger revenue get generated in the 2027 timeframe. So it's still a bit out. Rather, where I think we're going to get tangible, better results or better expectations is the B300, right? So their next iteration of Blackwell, where it sounds like things are ramping really well.
Bitcoin continues to struggle as it falls below 100,000. That's amid a sweep of risk aversion across markets. Crypto market remaining under strain with some $19 billion in liquidations, in turn erasing over $1 trillion from the total market cap of all cryptocurrencies. That is according to data from CoinGecko. And for more on the themes that we are seeing in crypto markets, let's welcome in Ava Labs president, John Wu. So John, let's talk a little bit just about the setup right now that you're seeing across the market broadly. And we had a discussion here yesterday on Yahoo Finance. Someone was like, hey, it's only been like 5 Fridays from today that we saw that massive dislocation on that October 10th date. We still haven't really, it seems, healed ourselves in the broader crypto space since then. Does it feel that way to you guys?
It's still in the process of healing from the asset class perspective, no doubt. I think what people sure there was a flush, so to speak, on October 10th. But reality is, over the last 6 months, maybe even a year or so, there's just been so many new instruments where people can access the crypto asset class, whether it is ETFs, whether it's these digital asset treasury companies, or even IPOs like Circle, Figure, or Gemini. All of these new securities, it's just a lot of supply into the market. Plus, there's a lot more tokens as well, and there's just not enough demand to absorb all that. And the irony here is all happening when real-world use and adoption is happening, from the JP Morgans to the BlackRocks to basically almost any industry you talk about. There's like brands using the blockchain technology to streamline their processes. So it's ironic, just as adoption's happening, the asset class is struggling a bit.
Michael, so good to see you right off the jump here. Look, we had Bitcoin hit a record high just a few weeks ago, $126,000. We've seen this pullback here over the past few weeks. I look at strategy stock down about 27% over the past month. Are investors losing faith in the Bitcoin movement?
No, I don't think they're losing faith. If you're an investor, it really comes down to what your time horizon is and how much volatility can you stomach. So if you want max performance, you're going to take max volatility. Strategies up 75% a year on average for the last 5 years. So you can actually outperform Bitcoin if you buy an equity that's amplified like MSTR. If you don't want to trust anybody. You want no counterparty risk. You buy Bitcoin. Bitcoin's up 50% a year over 5 years. No counterparty risk. It's very straightforward. If you want to have your cake and eat it too, you could buy some convertible preferred like STRK. STRK will get the vol. Yeah, the vol on MSTR is like 60, 70. The vol on Bitcoin is 45. STRK would get your vol to like high 20s. And you get a mixture of a dividend and principal protection and some of the upside of the common equity. And if your time horizon is less than 4 years and you don't have much volatility to stomach, you shouldn't buy the equity or the equity hybrids. You should buy the credit, something like STRC. You know, STRC is meant to be very, very stable, around $100 plus or minus a few pennies. And you get like a 10 and 10.5% dividend, you know, that's tax deferred, and you're getting the benefit of the crypto economy, but you're not on the volatility roller coaster. So everybody's got different risk tolerance. They've all got different pools of capital. The good news this year is now you've got a variety of different instruments you can use to ride the digital wave.
Everybody wants to ride the digital wave. Okay, so I've been just watching these scans. Nvidia still red with 2 million shares traded. Low floats. All I see is MSPR up here. V and AMZE as well. So we're coming up on 6:30 Central Time. So you're on Eastern side, you're probably 7:30. But yeah, kind of a lot of people sitting in the wind, seeing how things are gonna go. Because Bitcoin, I mean, like he said, with the volatility that we've seen over the last couple of days or whatnot, it's not something that's just, oh my goodness, this is a rug pull. It's more like this thing has been going up for a long time. It's pulling back a little bit. It's just the movement of investing, right? I've been waiting and adding little bits and pieces especially in this dip, adding little bits and pieces to my positions, and you know, we're gonna let it ride. Same thing with my stocks. Stocks have pulled back as well. Just adding little positions, adding little bits. Okay, let's go back over to okay, what's this news? 25 minutes ago, likely first AB5 trucking enforcement action in California snags 3 companies. I don't know what their cost. Not sure what this is. Okay. Trucking, Costco Wholesale Corp. How much is Costco? Costco, $922 per share. Ryder Last Mile, $169. Ooh, okay. Well, at this point, I'm just gonna let my scanners do some work and then wait for some more news to pop out. But hey, got a pretty good little bit of research done. These are the stocks that I took note of right here. So Google had a little bit of news this morning. Berkshire Hathaway reveals a $4.9 billion stake in them, but that's not news that they're actually doing anything. It's just Berkshire Hathaway. So I don't know how hot that's gonna get. Let me add Nvidia here. Nvidia is leading the way with volume. So 2 million shares up there. So it's got the biggest draw, but it is red on the day. Google, Amazon, Starbucks, and Target. Starbucks and Target really don't have the volume to keep up with these other three, and I'll probably end up cleaning them off after later on in the day. So just watching and seeing how these things go. Only trade you got Friday wasn't. Wait, the only trade I got Friday wasn't Nvidia and QTBS. Is that supposed to be was or wasn't? And then QTBS. Oh, QBTS. BTS. Oh, you did get okay. So on Friday, it looks like QTBS had this movement up from 21.33 all the way up here to 24. Had a little dip here. Kind of played within this range once it got settled. And then Nvidia. Let's look at that Friday trade. Nvidia had a move up as well from 180s all the way up here to right around the 190s. Then even had a gap up during after, or no, this is pre-market, right? 7, no, that's 7 o'clock. 7. Well, this goes all the way to 11 something, 11:30. That was still trading it, but now it's all the way back now. Not all the way back down. It just did a little pullback here. Let's refresh. Do we have any speakers on today? Today is the 17th. We have Philip N. Jefferson, Economic Outlook and Monetary Policy at the Federal Reserve Bank of Kansas City, Kansas City. We have Governor Christopher J. Waller, Economic Outlook at the Society of Professional Economists. Annual dinner 2025 London in the UK. Okay, so pretty much this whole week is speakers. Monday, speakers. Tuesday, bar, bank supervision. Wednesday, bank regulation and Fed's balance sheet. Financial stability by Cook. bar, welcoming remarks and financial stability. So speakers every day this week. says UBS chair talked to Scott Bessent about moving bank to US.
To the investment areas that you're invested across a lot of different sectors, and not just through Shark Tank, but also through the Shark Group as well. Is there any particular theme that you're watching right now and you want to put money to work in that area?
Well, there's two themes. And first of all, everybody has to understand AI, right? And so there's three themes. Understanding AI right now. The next one is and embracing AI as fast as it's moving. The next one is really understanding where the consumer is and how you grab their attention. Live selling is really where you can grab attention fairly quickly and build your own community. Another one is shoot. Now I'm going to get to four. Another one is biohacking is a section, and longevity. The people that feel like they've been lied to, and now they want to take their health into their own hands. And whether it is a mom who wants to make sure she doesn't have die number 5 or 7 in something, or somebody who wants to know about fasting, those would be the major ones. I'm trying to think about. There was one more, but I will probably get back to. Social cause. That's the reason why my company, Bombas, is the #1 company in all 54 Shark Tanks around the world, because every time that you buy a pair of socks or underwear, they give a pair away to the homeless, because that is the #1 requested clothing, item of clothing in the homeless shelters, and they're in the shelters.
And what you're speaking with all these different themes, it really shows how much the business world continues to evolve, right? If you were starting FUBU today, is there anything you would change or do differently?
Oh, absolutely. I would break down the selling. I would no longer have to deal with retailers. I would, of course, do the same thing we did, where I let people know who the CEO and who the founders of the company were, because people want to know not only what they're buying, who they're buying it from, but also I would break this out into 2 kids in every university and in every high school. 1 male, 1 female. We give them about $500 worth of credit, let them buy about $1,500 worth of FUBU, and sell it themselves, kind of like the Avon model, and bring people up the ladder. This way, I would have 100,000 salespeople out there who are giving me real data on why people are buying or not.
It didn't come in from a listener, but it's a question I get all the time from my children and my children's friends, is when they switch jobs, should they roll over the 401k from their former employer to their new employer, or into an IRA, or leave it behind? Tough choice, right?
Yeah, I mean, maybe I'll kind of jump in there. I think, I see it through my own employees, and what really impresses me today is I actually see employees being more active in that conversation and consolidating. I think the challenge of having lost IRAs and not simplifying is a huge problem. Most plan participants today do have the option to bring their 401k to their new employer. And so whether it's rolling over to an IRA or just rolling it to the new employer, keeping it in one place, right? This spaghetti of retirement savings in lots of different places, it ends up with people typically being underinvested, not remembering what they have, and I think it makes
track of what they had, right?
Exactly.
Because
I mean, there are a number of these, like,
their address.
Yeah, particularly, and we see this, like, your email address when you come out of school is likely different than the email address you're using 20 years later.
And maybe deleted by your school.
I just think simplicity, to be so you can track it, is so much better.
Yeah, it's so bad that Secure Act 2.0, that retirement bill that we had just a few years ago, created the Department of Retirement Lost and Found. It sounds like a made-up thing because it's so silly, but that's how many people are not keeping track and end up, losing track of their dollars in retirement accounts. So I do think, to your point, that most people are better off, whether it's for easier consolidation and just when you get to retirement age, required minimum distributions, only having to go to one place, whether it's managing the money in a more efficient manner. But there's always exceptions to the rule. We're here today in New York City. New York City school teachers get an automatic 7% return if they go into their fixed option, right? Like, that is very unique to that plan, but every plan has something a little bit different. If you're getting 7% guaranteed in your fixed option, there's not a better bond option out there today. Yeah. So that would be one of the exceptions to the rule, or maybe you do leave your money in the plan. It's why we have jobs, right? Is to help people make these decisions.
All right, so the reality of it is, and no names here, but a close friend, should I call her, says it's just too hard to take the money from my former employer's 401k and move it into either my new employer or into an IRA. She's overwhelmed by the process.
Yes, and the key is staying with it because it's your money and it's your life. Yes, of course, no one wants to give up money for any reason. I'm specifically saying institutions, and it is a process that has been going on for quite some time. So get on the phone, find out the forms, figure out who your key people are, document what's happening, follow through. It's your money, it's your future.
I want to double tap on the get on the phone because it seems so old school these days to say that. But I know, so I worked at JP Morgan for a long time. And when I left JP Morgan, I rolled over my 401k and I did not understand the paperwork myself. Like, it was complicated. Yeah. And so I got on the phone because I wanted to make sure it was done correctly. And I think those lifelines are there. Even those of us that are experts are reading this paperwork and it is not written for the average human being.
Yeah.
So pretend it's like Who Wants to Be a Millionaire, and that you get to call a friend.
Yes, for sure. But these services are here for you, right? Just take advantage of it.
When you're surveying all those fans over in Investopedia, how would you broadly characterize investor sentiment right now based on your survey work? I mean, is it optimistic, Caleb, cautious, downbeat? What do you see?
Yeah, cautiously optimistic is how I would describe it, and why not? We are seeing many all-time highs already so far this year. We do have the wind at our backs in terms of corporate profits, and we've been seeing that play out in the earnings numbers, but they're also concerned about the underlying economy. At what point does a potential weakness in the economy translate into weakness in the stock market? So far, they're still dancing in opposite directions, and that's kind of, they usually move in different directions, or usually not down the same path. But right now they're wondering, is this going to last? And they're worried, just like some of the people you talk to, about their own personal finances or about their neighbors' personal finances. In the stock market, their assets have done very well. We got more millionaires than ever. We got more 401k millionaires than ever. We have more retail investors invested in the stock market than ever. That's good. That's a way to generate wealth. But maybe at some point, this diversion between the two, the economy and the stock market, catches up to the stock market and affects overall mood.
Sort of underappreciated areas of the market for a retail investor or somebody who's looking at the composition of their 401k, where should they be looking then?
I think the most important thing I would advise a retail investor or any investor in retail institutional is, look, I don't know where the equity market ends. I don't know where it tops out. I think it's topped out, but it may be a lot higher from here. But what I would say is, remember, in bonds, you're only getting back par. That's it. It's a loan. Like your upside is basically what you lent to the borrower. And so, keep that in mind. So you kind of want, you don't usually get paid to be in the parts of the economy and the bond market that everybody wants to talk about in the cocktail hour. You basically want to make kind of really good, sound investments. And so from a fixed income perspective, what are we trying to do? We're just trying to generate very good income for our clients, good total rate of return. We want bonds to perform like our clients expect them to in their overall portfolio. Mm-hmm. And so that's my recommendation. You can express those euphoric views maybe in your equity portfolio because you actually might have the upside. In your bond portfolio, you just want to kind of be straight down the middle, like your 4-iron, on the golf course. Yeah. Get your coupon, get your income, and keep your liquidity.
All right. So Senate was pointing out Google, and that's one of the ones that's actually on my high flow scanner that has million shares traded here in pre-market. Nvidia and Google, we were looking at earlier, Google is currently up 4%. Nvidia is down 1%, but still has more volume than Google. As far as the low flows are still looking the same. So a lot of times if the high flows are taking the majority of the volume, I'm like, all right, let me just wait. Let me just see what's going on, because any low float that comes up here is going to have to challenge these high floats that have been already getting the eyes. They already have news headlined on the front page. So it's kind of, can a small cap actually overpower this or what? And so right now we're just kind of like playing a waiting game here. But yeah, Nvidia and Google, This scanner specifically is looking for high floats that can move, that will move with range. We want things, especially things with larger floats, things that move dollars and not pennies, you know. And when we see excitement over here on things that move dollars and not pennies, we have to be very wary in the low floats, because if they're sucking up the volume, if they're sucking up the attention, they can make big moves like they did on that Friday or one of those days where we saw a pre-market that was a lot of high floats were up here with a lot of volume, and then as soon as the market opened, boom, they made huge moves. So I like to keep those kind of under watch or whatnot, so that I don't be in the low floats wondering, well, where's the volume? Where's this? Where's that? Why isn't this moving? Well, it might be because Nvidia or Google has good news or bad news, and they are taking all of the attention. Okay, let's continue. Let's see. So Senate said great move. XPEV earnings this morning. XPEV, yeah, he said. XPEV. So it was at 25, did a little drop here to 24.03. It went up to a high of 28.49 and has made its way back down here. Let me see how much volume it has on XPEV. Okay, it's got 1 million shares traded. It's gonna be popping up here soon. So yeah, I'm surprised it's not here yet. But TOS, they do have a little bit of delay with their scanners. I think it's like 15 minutes or something like that, and it pops up. But I mean, during pre-market, that's enough time for me to be like, oh, there it is. But yeah, for right now, Nvidia leading, Google with 1 million shares, XPEV right behind it, down 3%. And it'll be getting added up here to the high floats very soon, because it crossed that 1 million shares traded. But Starbucks and Target, I don't know if they're going to be able to keep up with these guys. I don't think they are. I'm probably going to end up taking them off, actually, because they are not looking great. I want you to be in pre-market, get to that 1 million shares. Show me somebody's looking at you. Amazon also a long way away, so not too worried about that. But these top three, Nvidia, Google, XPEV, are definitely leading the day in the large caps.
Brian, thank you so much. Really appreciate it.
I'll tell you, the thing I get in most trouble for in my intellectual circles is the following statement. Silicon Valley, like the rest of the world, will listen to you if those ideas make you money. Now, of course, you still have to have convincing ideas that are true, but if those ideas are not tailored to real world things that work, and the Valley, quite frankly, is dollars, they will not listen. The fact is, and again, whenever I tell this to my intellectual friends, they stop talking to me because they want to believe that pure ideas change the world. Pure ideas don't change the world. I'll tell you what changes the world. Pure ideas backed by the military, in this case, hopefully the US. Doesn't mean you have to use the military. If you're strong enough, like this is where I'm like, a Palantir is not a neocon project. Our project is to make America so strong we never fight. That's different than so almost strong enough so we always fight, right? So your ideas get listened to if you are dominant on the battlefield, and hopefully so dominant you don't have to use it. But if you do use it, people are like, yeah, I'm not screwing with those. Or if those ideas make someone a lot of money. You still have to have the ideas. In part, the intellectuals get so angry, my intellectual friends, it's like because they just think they write a book, someone reads it, and it changes the world. Nuh-uh. And like that's not the way intellectual projects have ever worked. The ideas have to have a real world input. And so the fact that Palantir is at whatever we're at, this changes the Valley, because not only was the patriotism right, but the patriotism will make you rich. And that's what that impact on the Valley is going to be very long lasting. And I'm very proud of that. But again, you can't just be proud of the idea. That was right from the beginning. It was been right since the history of our country, that our way of organizing, especially our Constitution, is superior. It's certainly superior for Americans. Again, superior for us doesn't mean we export it to everyone in the world, but superior for us since conception. But to make people listen up in their seats, you need to be dominant on the military and dominant on the economy. And Palantir plays a really but for role in both of those areas, and that's something that I'm proud of, because not just because of the impact, but because the way in which it reverberates both in Silicon Valley and outside. And by the way, it also stands for, anyone can make it. One of the things that's in the biography is, read where I came from. Read that. There's no reason you can't advance in this society. And that's an important lesson for everybody, especially outside the Valley.
Good insights. Good insights. All right, let's see what new things we have. So nothing, still USB, UBS chair. Any more? Nope. Look, man, we're on that news, man. We're on that news. Even out here on the trending tickers, I see Netflix. Did Netflix go ahead and do that reverse? They did the reverse split, right? It's $111 right now. Is Netflix a dividend stock? I forget. Let's see, dividends. Let's see, Netflix. What do you have for us today? I know it's big on technology and all of that, but it says prices of November 14th. It's at $111 right now. Okay, so it does not pay out any dividends. But for the price that it said, it was at $1,000 something on Netflix. So now for the price, where's my oh, there it is. Now for the price, it's at $111 now. So that's going to absolutely give new investors a grand opportunity to get some. Let's go over here and look around. Netflix. Oops, wrong one. Netflix. So yeah, that's definitely going to be some opportunity there. And for those that were actually already holding Netflix, they got blessed with a 10 for 1. So every one share they had, they got 10 shares. But yeah, 110. We'll see. I might add this to, I might have to create another portfolio for these types, just to get a little bit of Netflix. It seems, at first I thought Netflix would not be as good as it has been, but it's always gotten partnerships, always done more, always been incorporating the new technology. So it's kind of a hard one to just say, oh man, that thing's over with. Even though there's so many streaming options, there's so many other things, people are still on that Netflix roller coaster. Senate says, does APLD, wait. Let me read through all of these. Phineas, he said QUBT made a really good move on Friday, watching it also this morning. Then Senate said Netflix today, and then he says, does APLD have a lot of volume? Let me see. APLD. Compared to the other ones, no. Nvidia has 2 million. Google has 1 million out here. XPEV has 1 million. APLD only has 224,000. So it's got some work to do to try to compete with these top higher float large cap movers. Now, if it can spur up and start catching up, maybe, but right now it's looking like these top three are getting fed a lot more. And I don't know if I didn't see AP. All of these ones, Nvidia, Google, XPEV are actually in the news. I didn't see APLD appearing in the news, so that may be why it's not getting any real volume. But if they pop up, do they have earnings or something? APLD. Okay. So 2 days ago, APLD was surging, stock spiking. Options, financials, community. I'm not sure if they have earnings today or if it was last week. No, I'm not going to upgrade. I'm not sure. Best sent Trump's 2K dividend checks need Congress vote. How y'all feel about a $2,000 dividend check? Will it assist you in life at all? Will it assist you in life at all? Or will you get your dividend check and just reinvest it? Okay, Infinite Orbit secures 4 million euros of new financing. I don't know what Infinite Orbit is. Infinite Orbit funding round is said on Monday, adding that the financing will help Europe to compete more effectively against the United States and China in the satellite sector. Okay, so satellite, Starlink, latest backers, EU, blah. Europe takes aim at Musk's Starlink with new satellite champion, Airbus Defense and Space. Okay, at least we got some competition out here. It's not a monopoly. A little bit. So Europe trying to get back in there. Airbus have cut a combined 3,000 jobs following space losses. Let me wait. Let me go up a little bit. I read that backwards. All right, deal forged. Blah blah blah. Elon Musk. Boom boom boom. Let's see. So French Finance Minister Roland, Italy venture faces global competition. Blah blah blah. What was that? 25,000. First development, the new combination will employ 25,000 people with revenue of 6.5 billion euros based on 2024 figures. But then we come down here and we see Airbus and Thales have cut a combined 3,000 jobs following space losses. Well, we'll see how all that goes. Sometimes on days like this, it's like, man, just let a low float just pop up, man. Start going crazy. But, you know, I just let my scanners go to work. The scanners have been working, so I'm like, hey, there's no reason to push into it because I know a lot of times, I remember when I'd be like, man, let me just go find something. Let me just go find something that has low volume. Maybe it has a little bit of catalyst, but nobody's looking at it. And maybe I could be the first one there. And that never worked out because a lot of this day trading and all of that is momentum based. And it's not like, let me guess where the momentum's going to be. It's like, okay, there's already people here, a little bit of liquidity. I can work with this. Not so much, oh, let me just jump in on the day and hope it goes my direction. I want it to already be going my direction. Let's find a trend on the day and ride that trend. Let's ride that trend. Only thing about XPEV right now, I just saw XPEV ATR. So we look at NVIDIA's ATR, and this is probably why it's getting more volume. ATR of $7.72. Google has ATR of $7.81 on a regular day. XPEV only has a ATR of $1.41. So you can see it's almost like it makes sense. Once you start seeing the numbers, it's like, oh, that's why more people are interested in this because it has a bigger range. It's easier to get $1 per share. It's easier to get $2 per share on these names, Nvidia, Google, relative to XPEV, which only has an ATR of $1.41. So you can see why it has less volume. It's like, oh, that makes sense. It starts clicking. One of the things I haven't checked in a while is beta, but I really haven't had to. Beta is basically telling you how it follows the market. So beta goes from zero, or not zero, goes from +5 all the way down to -5, right? So the closer it is to zero, the less it really cares about the overall market. If the more positive it is, the more it correlates with the market. So if it's like a +4, +5, and the market's going up, it's probably going to be going up, like some of these big tech stocks. If it's negative or under zero, it's an inverse. So if the market's going up, it's probably going to be going the opposite way. If the market's going down, it's probably going to be going up. And I haven't really checked the beta so much because with the things that I'm trading, like small caps or low floats, they really just don't care. But for the large caps, understanding the beta is probably a lot more pertinent, seeing how it statistically has reacted to the market. And TOS, Thinkorswim does have beta natively, so it's already there. It's nothing that needs to be coded. You just type in beta. They have a couple different types. They got beta 2, but I just use the regular beta. Beta 2 is just for more smoothing of the curve that they of the dynamic curve that they have. But I really am like, just show me the beta. How is it statistically been moving with the market? Good morning, Danielle. V continued to move on down. Did a nice little round trip. Got 10 million shares traded on V. Only $1.93. It's got more volume than all the higher floats though. But yeah, I'm not sure about it. I did not see any kind of catalyst on it today, but it did have catalysts on the 12th. Tesla just jumped up here on the higher floats. Tesla just joined. So Nvidia, Google, Tesla, and look how quickly Tesla is catching up with XPEV. Got 1 million something shares, and then XPEV over here has almost 2 million shares, but Tesla is running up on its back. But look at Tesla's ATR. Tesla's ATR is $21.63 on a normal day. So how easy is it to get 20 cents on that? 10 cents on that, right? When you look at the overall range and you have your strategy, you can say, hey, I can get 10 cents off of something that's moving 21 bucks. I can get 20 cents off something that's moving 21 bucks. And that's kind of the mindset that people have coming in here. Let me get on this. And these are the top 4 that I'm seeing in the high flows. And you can see that volume pouring into all of them. Tesla's going to catch up with XPEV very quickly here, even though it's not even up much, right? So both Nvidia and Tesla are red on the day, but still volume is pouring in. Tesla now at 14, about to pack XPEV up real quick here. XPEV only has 2 million, and Tesla's, I mean, it's just running up on it. It wants all the smoke. And then Irene is something that we saw last week. I think it had something to do with AI or something. Let me look into that real quick. Irene Limited. Oh, Irene. Irene Limited operates in the vertically integrated data center business in Australia and Canada. The company owns and operates computing hardware as well as electrical infrastructure and data centers. It also mines Bitcoin, a scarce digital asset that is created and transmitted through the operation of peer-to-peer network of computers running the Bitcoin software. The company was formerly known as Iris Energy. Limited and changed its name to Irene Limited in November 2024. The company was incorporated in 2018 and is based in Sydney, Australia. So coming on up. Another little cheap low flow just popped up here. Very cheap. CMND coming up with 4 million shares traded, 30 cents. So, yeah. So that's where the focus is going to be on this morning, is these little cheap ones. It does have catalysts on the day, but it says Clearmind Medicine files Israeli patent for novel non-hallucinogenic neuroplastogen treatment for depression. Okay, hit up to 36 cents, and now it's just kind of trading down here. It's got almost 5 million shares traded, so it still has more volume than the higher floats that we've seen. Nvidia's right on its tail, but hasn't caught it yet. But it's only up 5%. I'm not sure if that's going to be able to play for anybody today. I'm going to leave that one alone because it is so cheap. Oh, they just posted a new video, huh? Okay, let me play that here.
It's executive editor Brian Sozzi. Like I always say, this podcast will make you a smarter investor, period. And a lot of smarter about portfolio construction and markets. In this episode, Jose Minaya, global head of BNY Investments, is here. Good to see you.
Good to see you. Thanks for having me.
Yeah. So I think before we can even get into what you do and how you do, I need to get your assessment of the markets at this point in the year.
You know, I think not much different from the beginning of the year, right? We've been pretty consistent in that there's a lot to be constructive in the markets, right? It's like if you think about, we just went through, a set of earnings, what you're seeing with unemployment, what you're seeing with the Fed being more accommodative, all that is continues to point to very constructive markets. At the other end, the list of things that can go wrong on the tail end just continues.
It's off this table.
It's just, it just continues to add up to the list. So again, I would say you look at these markets and it's like very constructive. There's a lot of reasons to believe that'll continue. Yet you do have to kind of figure out, how do you cover your flank? How do you deal with the fact that tail risk is probably the highest it's been in my career?
When you talk to clients and you're traveling around, what makes them so excited to own stocks at these higher valuations?
Well, I don't know that I'd use the word excited. Again, they look at these markets, and anyone has also felt the pain of what's it been like to kind of not play this market, right? Like I think it's a very risky thing to say, I'm going to be risk off. What does that really mean? I think these markets have taught us, no, as an investor, you need to be risk on all the time. Now, the real question is, how are you mitigating or how are you diversifying your portfolio? How are you thinking about outcomes? So I think that thinking from clients, it was just about like, are you going to put me in large cap, mid caps?
What are 7 stocks known as Mag 7?
Yeah, the Mag 7 versus now the real conversation from clients is more and more around outcomes and say, look, I know I'm going to be invested, but help me protect myself with these different situations, or here are the outcomes I'm looking to generate.
What are you telling them in terms of protection?
I go back, and again, it sounds pretty simple, to that old diversification story. And diversification used to be this 70-30, 60-40, stocks, bonds. I think it's a lot more complicated than that today. Today, it's about, well, can you find ways to protect your principal? You find ways to develop specific yield that you're looking for. What's the duration? What's your timing? So for us, it's around constructing portfolios, bringing in alternatives and other things. It might be bringing in guaranteed income. Again, that basket of different kind of investments that gives you the right correlations, right? These These were all things that were highly academic, and everyone nodded and said, yeah, we get it. But when markets were all just going up at you could buy beta really cheaply and it was fine. I think that storyline's a little bit more complicated,
What do you view as alternative? Because when I used to think about alternative investing, I thought, all right, some real estate, private markets. Do you consider crypto as alternative?
Yeah, do I consider crypto? I guess maybe technically, I think about alternative investments really more tied back to correlations, right? And it's not about outsized returns. It's around saying, okay, is your portfolio protected against inflation or the ability for inflation to kind of show up and come back strongly? What about equity volatility? What are the different things? What are the outcomes you're trying to get? What are the assets that you can come in that give you that positive correlation? Not like if I think about crypto, right? People are looking for outsized returns, exposure to a particular theme. Those are traditional investment strategies. There's nothing wrong with them. But thinking about what is the outcome I am concerned about, or what is the outcome I'm trying to generate, and how do different asset classes play in? So if I own real estate, it's not because I think it's a great time to own real estate. I think it's just how it plays a part of my portfolio.
What's one of the, I guess, biggest tail risks you see to these markets? Is one, I've been thinking a lot about this lately. What if the Fed doesn't aggressively cut rates next year? What if suddenly we really start to worry about the U.S. debt situation and yields go up? I got a lot of worries in my head.
Obviously, like I said, the list of concerns is pretty long, geopolitical, et cetera. But I think the policy one is a big one because, I don't know, when I went to school, things around, watching rates go up as high as they did or cuts of what we saw with inflation, these things would have been kind of Armageddon type of situations.
That's true.
So it's hard to look at today and say, well, the yield curve gets inverted. Like, okay, are you supposed to care about that today? Okay, you look at debt and balance sheets today. Well, are we supposed to care about that? What about modern monetary theory? All these things that, again, the old models don't necessarily apply anymore, right?
Well, why do you think that's the case?
I partly think is demographic. I think the economy has become a lot more global than it was, 10, 20, 30 years ago. I think demographics have changed as well. I think technology plays a part in all of this. And also, I think governments have played a broader part in these kind of quote unquote free markets. So there's a whole host of things that I think are slightly different and more engaging that has kind of changed that narrative.
How did you get here?
How did I get to this studio?
Job, studio. How do you get a position like this?
I would say mine was not the most direct route. I grew up in Washington Heights. I'm the son of first immigrants from the Dominican Republic. Baseball was a big part. I went from I'm going to be a pro baseball to the point that I wasn't going to be.
How far did you make it?
I got drafted. I played a little minor league ball. But it's the humility of you go from being the best at something to literally not even belonging on the team. And then you say, okay, I'm going to start over. I went to school and then I was like, I was going to be a Marine. And I went to officer candidate school in the Marine Corps and, then realized that's not what I wanted to do with my career either for the long term. I just happened to find myself on Wall Street. I was good at math. I asked around, what do you do when you're good at math? Finance came up.
Spreadsheets.
Yeah, spreadsheets. So I picked up breadcrumbs along the way, but I think what really got me to this role was after picking up the breadcrumbs was kind of really a shifting of focus around what do I want to do? What am I passionate about? That moved me from the sell side to the buy side. That moved me to, launching a agriculture and natural resources fund, which again were things that I wasn't very heavily trained on. It was just very interesting, the thematics of it, the people that I met. So again, I started by picking up breadcrumbs and then I immediately shifted to the things that made me passionate and what I wanted to get up every day. I went back to that athlete that said, hey, I would go to bed in my workout clothes to get up at 4 a.m. and I couldn't wait to do it.
I really relate to your story because I've had to pick up a lot of breadcrumbs in my career. I started as a stock analyst, but nobody really guided me to get to that. I had to put a lot of pieces to the puzzle together. Who are your mentors, as you went through this journey?
I've got so many mentors, and I would say, though, I feel like every stage of the way, there was somebody there, right? Whether, I could count my family, obviously, as like my first mentors and my parents, but, they weren't educated. There was only so far they can take me. Then it was people, the dean of the business school, Manhattan College, was a mentor to me. And again, I count mentors, there were a handful of people, they just took a genuine interest in me. I think I was early on, I was very good at kind of understanding when someone was taking an interest in me. And I was also very good at investing in that relationship and not just having them help me, but me giving back to that relationship along the way.
What do you tell folks that you may be mentoring now? How do you give them some breadcrumbs?
The breadcrumbs, I try to keep it very simple, especially people coming right out of school. I would say, look, this is the easiest your job's ever going to be in your career, meaning do the little things really well. I speak to so many people now coming straight out of school, and they're asking me, when am I going to travel on deals? When am I going to work on the
Hold on, buddy. Hold on a second. Like, you got to,
it's like, hey,
time.
It's like, hey, the reality is no one's going to give you these big responsibilities. But you know what? One of the things.
Let me pause this real quick. So I see over here on low flows, we had a cheaper one that's right at $1. AMIX, AMIX popping up 32% with 15 million shares traded. Just wanted to bring attention to that if you have a strategy for these types. When it comes to the catalyst on it, it says Autonomics Medical Inc. reports positive subgroup results demonstrating sustained improvements in quality of life from post hoc analysis of pancreatic cancer. And let me show you the news I'm looking at right here. And then the next ones is just kind of a repeat of that news there. So it's got some news on today. It's doing a little bit of popping. Here's the 1 minute chart there, but I just saw it pop up and I just wanted to make sure y'all, if you have a strategy for it, it's right at 106. It hit a high up here of 116. Let's go out here and look at the daily chart real quick. So it closed over here at 72 cents and it is currently trading around $1 something. Had $1.30 something up there that looks like some type of peak that is hit and came back to a couple of times at that $1.30. But yeah, it is doing a little breakouts. It just broke over the previous levels there. It has 18 million shares. It has the most volume. Actually, it's working its way to having the most volume during pre-market. But yeah, just bringing attention. It closed on Friday with an ATR of 8 cents. It's moved, let's see, from 71 up here to, and if it closed below 75 cents, it's going to have some very strict halt levels, very tight halt levels when it does open up on the day. So, I mean, it could be one of those multi-halters, but with the catalyst that it has, I'm not sure. It's medical, cancer, but I'm not sure about how interested people will be with it. It's up 54% now, 19 million shares traded. If it crosses over MSPR here, it'll be the highest volume mover that we've seen on the morning. And we'll see how that goes. We shall see how that goes, but 91 cents up here to 119. It's just a little bit too cheap for me. We do have to pay attention and see how these wicks are going to be forming, if it gets wild with the wicks or if it kind of maybe consolidates, but we are seeing some wick patterns here. The previous high was 118 there. But anyway, that was just bringing attention to it. I'm about to flip back over.
I did, and I think I did it subconsciously. It's like, well, someone said, go make copies. Well, I know how to do that, and I can do that. So it's just being accountable, doing the little things really, really well. And then the second piece goes back to relationships, and along the way.
Another thing that I did not do, let me read some of these. So I saw Senate was talking about Walmart has earnings this week. Oh, Walmart. Oh, Walmart. Let's go look over here at the daily chart on Walmart. Walmart has continuously been going up. It's $102.48. It's just one of those that, I mean, it's always going to be around. Like it's almost either their online presence or their in-store presence. They're always going to be around. Plus they have the connection with Sam's Club. So they always have money popping in no matter what. But yeah, they closed at $102, and now where's their price now? 102.48. Closed at 102. They're about where they closed at. We'll see how their earnings go, but on this trend, I mean, I expect them to not fail too bad. And with the government shutdown being over, they probably have higher expectations for the holiday seasons as well.
Invest in those relationships, because sometimes you think what gets you ahead, it's that most direct correlation of I got to make my boss happy, but your boss has peers and they're watching as well, and your peers are watching. So across the board is how far you cast that halo or that that shadow, I think is also equally important.
How do you see how has Wall Street changed, compared to when you first started and today? I mean, there's some central planks, building relationships. You still have the spreadsheets. Now I guess people are using AI chatbots to do deals and scour SEC filings, but like what changes are you seeing?
Yeah, I think I keep saying that the next 5 years is going to bring in more change than I saw the previous 20 years. I look at what the value add for me was I'm going to do the grunt work really well. I'm a math guy. I'm going to do the cash flows really well. I'm going to pick better stocks than the next person, and that's really going to be what's important. More and more today, technology is at the forefront. How quickly and the ease that you can do these things. It's all of a sudden, I guess, performance is important, but it's table stakes. How quickly you're able to accommodate clients and moving assets from one place to the next very quickly. How easy you can accommodate customization for our clients. These are the things that are the tip of the spear today. And I think for folks like me, we've had to adjust because it's no longer just about like, look, I got the best factory for you in making these widgets and they're pretty true and tight. They're like, okay, that's great. There's at least another 50 people like you. Now, how are you helping me on these other things in terms of making my life easier?
We're a dying breed. But I think what sets us apart is like, and dying, I mean, like we're not dying, like relationships. I mean, you really have to think, I think, more on how to set yourself apart.
And you have to be willing to reinvent yourself. I was telling Robin Vince, our CEO, I was telling him recently, one of the things I've loved about being at BNY is like, it was probably over a decade since I was walking into rooms learning again. Typically, I walked into any room and I was the subject matter expert. Now I'm talking tokenization, custody, payments, treasury. And by the way, these things matter, right? They make the world go round. And again, but it's all a learning environment. That's fun. The whole part of being at this stage in your career and being able to reinvent yourself.
This is what I was talking about with these wicks. So we saw wicks, and we see this a lot of times with the cheaper stocks. People put very large stop orders on these. And with some brokers, you got to remember, TOS is a free broker, but some brokers do allow stop orders during pre-market. So, you have to remember that. So when you see these wicks out here on these cheaper stocks, that could be a very large stop order getting hit and getting wicked through and coming back down. That just hit a high of 124 there. And the place that we had marked on the charts was 130. That is seen resistance multiple times. Got kind of close, but not quite there. We'll see if it ends up going down. It does have the most volume on the day. If we look across our scans here, so low float, it's almost to 30 million. All right, so the next one was MSPR, which definitely lost out to this one. High floats, the most on high floats is NVIDIA with only not even 5 million. So no competition. This is where the eyes are right now. And if that's where the eyes are, I'm okay with just waiting it out because we already are observing these wicks. And we know this is Monday morning. A lot of these types love to make a nice move down when people get heavily invested in them. This is one of the times that, oversizing can actually get you killed at the beginning of the week. dollar something stock. You take 2,000 shares and it starts going down, and that's it. That's all she wrote. It's definitely got liquidity though. Looking over here on the level 2s, or on the just on the ladder here, look at these big sizes coming through at these price levels. 50,000, you know, just huge sizes. Just people very, very hungry for any trade. Not the best trade, but any trade. Give me anything is what you're seeing right here. Give me anything. Just put blood in the water. That's all you got to do, and they're in there. All right, let me go back over here.
And continue to learn. That just makes things fun.
You, before I go off to break, I should mention, you work at a very special place. What is it, America's oldest bank?
It's America's first bank.
First bank.
It's the first company ever traded on the New York Stock Exchange, so the first public company. The founder was Alexander Hamilton. The first clients were Elijah Hamilton and George Washington. It's pretty cool to be on our floor and going through all the, the first warrant and all these things. But I think also when you fast forward to today, BNY touches 20% of the world's assets, right? Almost $60 trillion. It clears all the treasuries for the United States. It custodies over 80% of the digital assets that are out there. So the ecosystem also is tremendous. And in our ability, I think why the firm has done so well in the current leadership is its ability to break down these silos and go after truly an entity that touches a fifth of the world's assets and has such a broad ecosystem.
All right, hang with us, Jose. We're going to go off for a quick break. We'll be right back.
All right. So yeah, AMIX coming on down from that high of the 125, 5 cents away from that previous level that always gets slammed down. Point of control at 110. Point of control on the 5 and the 15, 107 and 105. So it's pretty close to all of his points of controls. But yeah, we're seeing more and more wicks. The first move was kind of clean, but still had some huge wicks out here, slamming from $1 all the way back to 89 cents. Then from 113 back down here. So which one of these slams is not going to get caught? Which one of these slams is just going to keep going down? And that's the game you play when playing with these. So we got some type of idea of a downtrend here. It's trying to pop up. We'll see if it consolidates. The bottom of this level was 107. So crashing under 107s, I'm thinking it can get back under $1 very quickly and smoothly. It has 34 million shares traded. And let's see if it continues this pattern of these wicks, showing that true weakness. Anyway, it's about 7:30. This is the most exciting thing that we've seen on the morning. So, makes my stomach bubble. We'll see if anything better comes up. If not, oh well. It's just the beginning of the week. We just want to get a cushion and then build from there. So, yeah. No rush, no rush. $109. A lot of flashing back and forth on this one too. I don't like that. A lot of fake outs. Oh yeah, we're gonna break, we're gonna break, we're gonna break. A lot of people get stopped, they're trying to, they get scared, get out, get in, get out. Yeah. Don't like none of that. Going up there, touching the trend. Let's see if it dives back down. Low of this is 113. So let's see it get back through that 113. Only a 3-cent drop. That wasn't a good sign. This candle right here is a hangman. Let's see if it goes ahead and dives through here, back through the 113s. Hangman on the 1 minute, it's not as powerful as a hangman on the other higher time frames, but it is an indication that you're about to get some type of reversal. This low was to 111, just floating right at this this little level here. But again, we're seeing those wicks. Looking up there to the bodies of these candles. Let's see if it gets forced back down here to the 116. Double top. All the way back down to the 116. Another chance. It's right there at the 124s, and now it just hit that 130. The 130 was the daily level. This is his first test up here during pre-market. Let's see if it finds sellers up here. Bottom of this is 119, so a little explosion down through here, and it'll be back under that 115. $40 million shares traded on this one. So just another idea forming here off the 130. Needs to break down this 122 to confirm it, that this is going to start downtrending. Still above the previous idea there. Palantir just got added to the high floats list. I will circle through that real quick. I wanted to see this breakdown 123s here. So we'll go ahead and get this new idea formed here. Going down here. So we have a nice little tight channel that it can play within. Bottom side down here at 114. And then the new idea right there at the, well, we'll see what that wants to do. But 125 is kind of floating there. Let's circle through the watch list. I'm about to get on down. This is going to be the most exciting thing. I'm good. I'm good. Low floats. Look up here. We got AMIX 69%, 42 million shares traded. We got MSPR kind of lost the battle and hasn't really gotten any more trading on it since AMX passed it up. VEEE 11 million shares. CMND now going all the way back to red. And then on the high floats, we have Nvidia still leading the day for high float movers. We have Google, Tesla. We have Irene, Google again. I guess that's just a different type of Google. And then INQ and Palantir up here. So that's what I'm going to be looking to see if this ends up sucking up all the volume on the day and looking for the best opportunities behind that. Yep, looks like a garbage Monday. High floats. Oh, did I not change my screen? I thought I changed it. My bad. Low floats. Higher floats. We got Nvidia in them. And these were the ones that were actually in the, well, APLD was a call out, but Nvidia, XPEV, and Google were actually had on the news headlines. So let me remove APLD. That one's not getting any kind of volume there. But yeah, that's pretty much it. Let's go back over to where we were with the AMIX. Two ideas, two downward ideas. It did touch the 130s up there. And I mean, it's just in the danger zone at this point. But it is what it is. Donnell said he agrees with One Life. It is a trash Monday. So if you're going to be trading today, definitely know that you're playing with your skin in the game. And, you know, we will come and check on you in the hospital after you're done. And, yeah, that'll be it. We do have the Discord, and this is trading down to that first, that idea breakout right there to the 112s. And so we have this channel, doesn't want to break back into this old place, or does it want to go and kind of form some type of pattern here, but continue to go down. Point of control at 115 with 46 million shares traded, up 55%. And I have no faith in this one, actually, to be honest. Looks like it's going to be back under $1 shortly. But yeah, that's it for me today. About to bug out. I will visit the Discord if I see anything, but I'm not going to be just hardcore watching the market, especially with this kind of start on the morning. I really don't care. I like to see things start that are good from the jump, see them in pre-market, build a plan, and then make a trade. But what we've seen so far is just hunger in the market. People just looking for something to trade, which is AMIX. Just hungry, starving people needing something to trade today. 47 million shares traded on that kind of catalyst. Yeah, that's not looking the greatest. Anyway, that's it for me today. And as always, I'll see you guys in the next one tomorrow morning pre-market. Peace. did not realize I did not have my this main screen up. That's my bad. I don't know why I selected it. I selected the wrong screen. Oh well. to match exactly every single time. Don't play with me like that. Oh, okay. Let's see. So that's that. Oh yeah, I gotta get out of here. That's what I was trying to do. Okay.